There's a company that just turned a single, brutal question, can anyone challenge Nvidia, into a nearly 300% gain in 12 months. That company is AMD, Advanced Micro Devices, the chip maker that spent decades as the underdog to Intel and is now the #2 force in the single most important market on Earth, the chips that power artificial intelligence. The stock trades near $558. Its market cap is closing in on $900 billion, and it reports earnings on August 4th. So the question for this video is simple. After a run like that, with earnings just weeks away, is AMD still a buy, or is the easy money gone? Let's break it down. Welcome back to Long-Term Yield, where we cut through the hype and ask one question. Is this a business worth owning for the next 5 to 10 years? If that's your style, hit subscribe. It genuinely helps the channel. Quick disclaimer, I am not a financial advisor, and this is not financial advice. This is research and education. You're responsible for your own money. Cool? Let's talk AMD. Let's set the stage. AMD trades around $558 a share, with a market cap near $891 billion, knocking on the door of the trillion-dollar club. And the run has been staggering, up about 287% over the past year, up about 160% just this year. Its 52-week range tells the story. A low of $142, a high of $585. It's trading right near that high, above every single major moving average. This is a stock in a powerful uptrend. One thing to flag up front, with a beta of 2.47, AMD swings more than twice as hard as the market. This is not a sleepy stock. So why the massive re-rating? One word, AI. The world is spending hundreds of billions of dollars building AI data centers, and those data centers need two things AMD makes better than almost anyone: high-performance processors and AI accelerators. For years, one company owned that story. Now, AMD has become the credible #2. Let me show you exactly what they do. AMD is a semiconductor company founded back in 1969, headquartered in Santa Clara, California. But forget the history. Here's what matters today. AMD's business runs on 3 engines. Engine 1, the data center. This is the growth story. It's 2 products working together. First, EPYC, AMD's server processors, the CPUs that run the world's cloud and enterprise data centers. AMD has clawed its way to roughly 36.5% of the server CPU market, taking share from Intel year after year. Second, and more exciting, Instinct. These are AMD's AI accelerators, the MI series GPUs designed to train and run AI models, going head-to-head with Nvidia. Engine 2, client and gaming. These are the Ryzen processors in laptops and desktops, and the Radeon graphics chips, including the custom chips inside the PlayStation and Xbox. Engine 3, embedded. This came from AMD's acquisition of Xilinx, the specialized chips that go into cars, factories, aerospace, and networking gear. It's the steady, high-margin ballast of the business. But make no mistake, the entire investment thesis right now lives in that first engine, the data center, and specifically in AI. That's where the money is flowing, and that's where AMD's future will be decided. So let's talk about the opportunity that has this stock up nearly 300%. The market for AI accelerators is projected to become one of the largest in the history of technology, hundreds of billions of dollars a year. Right now, Nvidia dominates it. But here's the thing, the biggest buyers of AI chips on the planet, the hyperscalers, the cloud giants, do not want to depend on a single supplier. They want a second source. They want competition. They want leverage on price. And AMD is that second source. This isn't just theory. AMD has signed multi-year GPU deployment agreements with some of the biggest names in AI, including OpenAI and Meta. Think about what that means. The company building some of the most advanced AI in the world chose AMD's Instinct chips as part of its infrastructure. That is a massive validation, and it creates a multi-year revenue pipeline you can actually see coming. AMD's pitch is performance per dollar and energy efficiency. Its Instinct accelerators and its chiplet design, building chips from smaller, mix-and-match pieces, let it deliver competitive performance while keeping costs and power in check. In a world where data centers are limited by how much electricity they can get, efficiency is a genuine selling point. The bull case in one line: AI compute is exploding. The whole industry wants a strong number two, and AMD has become that number two, with the design wins to prove it. Now, unlike a lot of hot stocks, AMD actually has a moat, a durable, competitive advantage. The research rates it a narrow moat, a 7 out of 10. Not the widest in the world, but real and defensible. Here's what it's built on. First, the x86 duopoly. In server and PC processors, there are essentially two players that matter: Intel and AMD. That's an incredibly hard club to break into. It takes decades of engineering, software compatibility, and customer trust. AMD is now firmly the number two, and gaining. Second, chiplet architecture and execution. AMD pioneered building processors out of smaller chiplets, which lets it innovate faster and cheaper than rivals stuck on older approaches. Combined with multi-year qualification cycles, it takes a customer a year or more to validate and switch chips. That creates real switching costs and a real barrier to entry. But I promised you honesty, so here's the other side. AMD's moat is narrow, not wide, for two reasons. In AI software, Nvidia has CUDA, a deep, sticky developer ecosystem that AMD's ROCm platform is still chasing. And in discrete graphics, Nvidia's dominance is overwhelming. So AMD's advantage comes from execution and architecture, not from an unbreakable ecosystem lock. The research put it perfectly. AMD's moat is durable over the next decade, supported by execution, but it lacks the structural dominance of a wide moat. Translation: AMD has to keep out-executing to keep winning. So far it has. Let's look at the numbers, because the growth here is serious. Revenue. Over the trailing 12 months, AMD did about $37.5 billion in sales, up roughly 35% year over year. Zoom out and it's even more dramatic. Back in 2017, this company did about $5 billion. It has roughly 7x'd its revenue, and it's still accelerating because of AI. Earnings and cash. Net income came in around $4.9 billion. Operating income around $4.4 billion. But the number that really jumps out is free cash flow. About $8.6 billion, up an incredible 211% year over year. And earnings per share grew about 123% in a year. When cash flow is growing faster than revenue, that's a company hitting real operating leverage. Margins. Gross margin is about 47% and rising, up from a 5-year average around 42%. As the higher value data center and AI mix grows, that margin should keep climbing. The balance sheet. This is a fortress. AMD has about $12.4 billion in cash against just $3.2 billion in debt, a net cash position. Debt to EBITDA is 0.43, interest coverage is nearly 30 times, the current ratio is 2.72, and the Altman Z-score, a bankruptcy risk gauge, is 14, where anything over 3 is considered very safe. AMD pays no dividend. Every dollar goes back into growth. Now, one honest note on quality. Return on equity is currently about 8%, and return on invested capital about 7.6%. Those are modest, not the elite numbers you'd want yet. But that's the whole setup. AMD's profits are in the early innings of ramping. The bet is that as AI revenue scales, those returns climb sharply. Which brings us to the most debated part of this stock, the valuation. Here's where AMD gets tricky and where you need to think clearly. If you just look at the trailing price-to-earnings ratio, it's about 180. That sounds insane, but that number is misleading because AMD's earnings are temporarily depressed. The company is spending heavily to scale up, so reported profits are low relative to where they're headed. The number that matters is the forward PE, the price against next year's expected earnings. Analysts see earnings per share jumping from about $3 today toward more than $13 next year. At that level, the forward PE is about 42. Now, 42 times forward earnings is not cheap, but for a company growing earnings a projected 48% a year, with AI as a tailwind, it's the kind of premium the market is often willing to pay for a top-tier grower. Here's the fascinating part. The valuation models genuinely disagree. One blended fair value estimate lands around $519, just below today's price of $558, suggesting AMD is roughly fairly valued, maybe a touch rich. But a more aggressive discounted cash flow model, one that assumes AMD's projected 48 to 64% growth actually holds for years, spits out an intrinsic value north of $2,600 a share. I'm not telling you AMD is worth $2,600. I'm showing you the range. The entire debate comes down to one question. Do you believe AMD can keep growing at these rates for years? If yes, today's price looks reasonable, even cheap. If growth disappoints, that forward multiple gets expensive fast. That's the knife edge you're investing on.
So what could go wrong?
A few real things you should respect. 1. Nvidia. AMD is the number 2 in AI, and number 2 is a great place to be in a booming market. But Nvidia is a ferocious competitor with the CUDA software moat. AMD has to keep closing the gap on software and hardware every single generation. 2. The returns aren't proven yet. Remember, return on equity is only about 8% today. The whole thesis assumes profitability scales up. If it doesn't, the valuation has a long way to fall. 3. It's cyclical and concentrated. Chips are cyclical, and AMD relies on a single foundry, TSMC, to actually manufacture everything. Any disruption there is a risk. And with a beta near 2.5, expect a wild ride. None of these break the bull case, but they're the things a serious investor watches. And the next update on all of them comes very soon.
Mark your calendar.
AMD reports earnings on August 4th, and for a stock this hot, this one matters. Here's what I'll be watching. Number 1, data center and AI revenue. Is the Instinct ramp accelerating? Any update on those OpenAI and Meta deployments is a huge deal. Number 2, margins. Is gross margin still climbing toward the 50s as the AI mix grows? That's the key to those future returns. Number 3, guidance. With the stock up nearly 300%, expectations are sky high. Guidance for the back half of the year can move this stock 10% in a day, in either direction. Remember that beta. If AMD delivers, the credible number 2 in AI story gets a lot stronger. If it stumbles, expect volatility.
So let's bring it together.
The long-term yield verdict on AMD. What we have is a genuinely high-quality business. $37 billion in revenue growing 35%, free cash flow up over 200%, a fortress net cash balance sheet, a real, if narrow, moat in the x86 duopoly, and a credible, validated number 2 position in the biggest growth market of our lifetime. This is not a hype stock with no substance. It's a real company executing at a high level. The catch is the price. AMD is not cheap on today's earnings, and its current returns still have to prove themselves. You are paying up for future growth, so your entire return depends on that growth showing up. Here's how I'd frame it for a long-term investor. If you believe AI compute is a multi-year structural build-out and that the world needs a strong second chip supplier, then AMD is one of the highest quality ways to own that theme. And the August 4th earnings report is the next catalyst. If you're worried the growth is already priced in, then you respect that. You size your position accordingly. Maybe you buy in pieces, and you let the company keep proving it quarter by quarter. Either way, the underdog has become a heavyweight. AMD is now core AI infrastructure, and the market is treating it like it. That's my full breakdown of AMD. If it helped, smash that like button. It really does help. And tell me in the comments, are you buying AMD before August 4th or waiting? I read everyone. Subscribe and hit the bell for the next deep dive. As always, invest for the long term, think for yourself, and I'll see you in the next video.